Hello, Rebecca Foote here with the Rebecca Foote Mortgage Team. We are coming back on with another update because inflation hurts and optimism is falling. So, welcome to another mortgage market update. Today is April 14th, 2022. Now, we have lots of information to go over today, so we're just going to jump right in. There's lots of inflation data this week. On Tuesday, the CPI came out. That's the Consumer Price Index. Now, this measures inflation on a consumer level, and this rose by 1.2% in the month of March. And this pushed the year over year reading higher from the already high 7.9% all the way up to the expected 8.5. Now, this was the highest reading in 41 years since 1981. Now, the core reading, this strips out food and energy, rose by 0.3% last month. And this increased from 6.4% to 6.5, which was a bit less than expected. Now, we do want to let you know the biggest increases here was food went up a whole percent, 1% in the month of March. Rents rose by 0.4% in March. And year over year readings, the biggest increases were, you already guessed it, I don't need to tell you, right? Food is up 9% year over year, gasoline 48%, and used cars, right? 35% increases since this time last year. Just incredible. Now, yesterday on Wednesday, we had the PPI came out. That's the producer price index. So this is the manufacturers. This is the people making your goods that you're buying. So the first one was CPI, that's the consumer price index. PPI is the producer price index. So we got these numbers back to back. So PPI measures inflation on the wholesale level. This rose by 1.4% in March, which was hotter than expected. We were expecting 1.1%. Now, on a year over year basis, this number was already at 10.3% and it increased to 11.2%. This is the highest reading on level since they changed the methodology in 2010. Now, when you take the core rating, again, strip out the food and energy prices, this rose 1% in the month of March. This was double expectations. And this was a year over year increase. It took it from 8.7% to 9.2%. So you got think about this from the manufacturer's side. When manufacturers' prices go up, they either have to absorb it or they have to pass it on to consumers. That's their only two options. So, they can only absorb so much and they're going to have to keep passing it on. Now, this coincides with the NFIB Small Business Optimism report, where 50% of companies were surveyed and they are expecting future price hikes. So, I don't think inflation is going to stop here, folks. I hate to tell you that. And talking about the NFIB Small Business Optimism fell to the lowest level, the weakest level in 2 years. This is a big problem, and the biggest problems are inflation, as we just talked about, following the ongoing staffing shortage, and then supply chain disruptions. The MBA released mortgage applications for last week. Purchase applications increased 1.4%, but they're still down 6.4% year over year. But you got to remember that is just mortgage applications. It doesn't factor in cash buyers. And when you do factor in cash buyers, we are actually down about 3%. So not too bad. And while volumes are low, purchases are still showing very, very strong, considering higher price homes, record low inventory, and higher rates. So, speaking of higher rates, MBA reported that a 30-year fix is up to 5.13% last week, which is the highest since November of 2018. And that's 1.78% higher than this time last year. And remember, these are last week's numbers. They're probably even higher this week because of the way the market has been going. Now, refinances fell another 5% this week. They're down 62% year over year, but refinances are still making up 37% of all transactions, and here is why. There was just a study that came out from Bank of America, and you see, Bank of America actually services a third to about half of all the population in the United States. I know that's pretty big, isn't it? So it's a really good sample size. And Bank of America came out saying credit card debt increased 33% from pre pandemic levels. 33%. So people are spending, okay? And this actually coincides with retail sales reports that came out showing that people are spending and they're putting it on their credit cards. Now, this also goes along with the CNBC report that came out last month showing that credit card balances are at record highs. So people are definitely out there spending, and that's why it's a good time to look at those refinances, even though rates are up. We'd love to show you how you can do a debt consolidation, pay off those credit cards, because at this point, people have more equity in their house than they've ever had before. So we can actually refinance you, pay off those credit cards, and put you in a better financial situation, even if that interest rate is a little bit higher than what you're currently at. Also, in that report from Bank of America, they came out saying that people actually have $1,500 more in their bank account now than they did at pre pandemic levels. So it just goes to show you that people are still spending, but they also have money in their bank accounts. It's just that money is going on those credit cards. And it's just a very interesting sign because this is another sign pointing to a recession. And another sign pointing to a recession is shipments and freight. All these goods have to be shipped, and shipments and freight are starting to slow down. These volume levels it's an early indicator when recessions are coming. So Chase Freight's March report came out with year-over-year numbers, and we were up 3.6%, and now we're only up 0.6%. And shipments were up 2.7%, but Chase Freight says that these we should actually be 100 basis points. That's a whole percent more than where we are at this time. So it's just another early sign of a recession. So that's the current market update. Remember, the markets closed at 2 o'clock due to the holiday weekend. Markets are closed tomorrow due to Passover. So remember, we are open tomorrow to help our customers. Happy Passover, happy Easter weekend. Praise God, Jesus is risen. Have a great Easter weekend, everybody.